Hello, everyone. It is Jennifer. I am here, and it took me a little while to get here, but I am here, and I'm excited because this is the finale broadcast for the Credit and Funding Mastery Summit. We have covered a whole lot of topics that, when it comes to credit, when it comes to how to restore your credit, your personal credit, how to build business credit, how to position yourself for funding, different types of funding, how to get grants through if you have a nonprofit and why you would look at starting a nonprofit potentially, how to get government contracts, so many different areas. And I am just extremely, extremely proud of the content that we've been able to share and the information that we've been able to communicate that will definitely impact a lot of people's lives in a huge way. So I am very, very excited and privileged tonight with a training where I'm talking about how you can get funding to either start or grow your business. Now, I am actually, let me do this. We're going to be talking about how to get funding, and we're going to talk about a variety of different ways that you can go about doing so. As you can imagine, there are a number of ways that you can go about getting funding for your business. It really just depends on what stage of your business that you are in. You know, are you an existing business? How long have you been in business? Are you just someone who's thinking about starting a business and you haven't quite done that yet? That really is going to make a big difference in terms of uh, what type of funding that you will actually qualify for. I actually want to share my screen if I can do that, so you can take a look at some of this content. And actually, you know what? It's actually not it's not necessary for me to share my screen. What I'll do is share the PDF document that describes the content that I'm going to go through tonight, so you can have that for your reference, and it'll be extremely helpful for you. So I will go ahead and get started. So first of all, we're going to talk about there's actually, let me see, how many is there? There are six different methodologies that I've outlined. I'm sorry, five methodologies that I've outlined in order to help you get funding to start or grow your business. Each of them, and kind of break down how each of them works, so you can get a better idea on, you know, what makes sense for your particular situation. So let's go ahead and get started. This is a working a working workshop or a class, shall I say. So I'm going to have a little glass of wine. You can also join me in having some whatever type of beverage that you like. Have some water, you know, take a load off, but definitely make sure that you have a pen and pad handy so you can take some notes, because I'm going to be going over will definitely be valuable in that regard. So I'm gonna go ahead and get started. Now, the first methodology, of course, that you can use to secure funding for your business is, of course, to go into your own personal savings. Now, a lot of people may not necessarily have a significant savings, depending on, you know, what type of business that you're looking to start, what the startup fees are for that. You know, that may not be the case. One of the things that we went over within, and it's actually going to be included as a bonus session within the Mastery Summit, the Credit and Funding Mastery Summit, is a presentation by a gentleman by the name of Curtis Banks. and he is known as the Money Smart Mentor. He actually has, do I have this book handy? Yeah, I do. Here's his book. It's called The Book of Money Management. And in it, he breaks down a very, very powerful money management system that shows you how to manage your money and not budget your money. You know, a lot of people have a rough time when it comes to uh, budgeting because it feels so restrictive. They feel like they can't do anything. You know, it's psychologically very challenging for a lot of people. But what he outlines is a methodology to actually manage your money so that you're not feeling restricted. You're actually actively participating in the growth of your money, and it's very, very powerful. So I'm just going to outline a few of these, like the money management system that he suggests, because I think just utilizing this structure will help a lot of people get a better grasp on how you can not only increase your savings, but also increase your long-term wealth over time and really get a handle on where your money is going. So the first uh, account, you can either set this up as an account, as an envelope, as a jar, whatever you want to do. But the first account, I will say account for this example, would be necessities. So your necessities is basically going to be anything that is required, uh, to live. This is just straight your mortgage, your rent, your bills, your utilities, stuff like that is going to be classified under necessities. And it is recommended that you allocate no more than 55% of your income to your necessities, the things that you need absolutely to live. So that is actually an interesting thing, particularly for people that live in high rent, high mortgage places. A lot of times, what we find is that people are spending almost or 50% or even more on just their housing costs, let alone any other bills. But if that is the case with you, then you're setting yourself up for some financial challenges. So you really want to keep yourself under that 55% mark just to make sure that you're not experiencing any hardship or setting yourself for hardship in the future. The second account would be your long-term savings, and that is if you want to make a major purchase. So let's just say you're saving up to buy a house, you're saving up to put a down payment on a car or to purchase a car cash. You want to buy a boat or something along those lines. That would be considered long-term savings. So that is something that you are going to put money aside. It could be even your vacation. You're putting money aside with a specific date and a goal of when you're going to be able to utilize that money. So you want to put away 10% of your income towards that. The third category is your education. And I really like this category because I think it's one that a lot of people totally gloss over. But you need to make sure that you are educating yourself, that you are getting tools and skills that are going to help you up your game in whatever you do. So if you are a business owner, of course, there are certain principles and certain skill sets that you need to make sure that you really have and that you're very good at. So it could be taking a sales course. It could be taking a marketing class. It could be investing in a coach. All of those things are very, very important to your long-term growth. And I've heard it said many a times that the best thing that you can invest in is yourself. And I 100% agree, because the knowledge that you get and the skill sets that you attain are going to help you to get to the next level in every category of your life. So it's really important that you make that area a priority. The fourth category is your play account. And this one is, kind of, oh, did I say education? Education, you're going to put 10% away, in case I didn't mention that. Now, with your play account, This is for, if for your fun stuff, you're going out, having dinner with your friends, going to the movies, all that good stuff. So you basically want to allocate no more than, and this is up to you. You can either allocate 5 or 10% towards your play account. It's interchangeable. I think Curtis recommends 5% for play. Some people need a little bit more for their play and enjoyment. There, you can pull from another category, which we'll discuss in a few, but I personally am leaning towards that 5% for the play. And that's how I roll. The next category is your financial freedom account. So that is what we consider to be like your golden goose. This is your account that is for your investments, your long-term growth investments. So you're never, ever, ever going to touch this money that's in your financial freedom account. This is the money that you're going to use to invest, to put into stocks, to purchase property, investment property, or something along those lines. It is all about money that you use to make more money. So you're going to allocate 10% of your funds to your financial freedom. The last category is your give account. And that particular account is for charity. There is spiritual principle that really is tied to the act of giving. As we give, we also receive. So with that being said, it's very, very important that we allocate a certain amount of money towards giving. And you can either elect to do 5% or 10%, depending on, what makes sense and what works for you. But again, you can interchange that with the play account. So if you feel like, okay, I need a little bit more money to go out to the movies and enjoy myself with my friends, then you can allocate 10%. If you are looking at, hey, I don't really go out that much, I don't really need that extra money, then we'll allocate that towards your give account. And you got to excuse me, I'm expecting a, are you, and I apologize. So anyway, moving on. So that is one category. So the next is to turn your business idea into a nonprofit. Now, if you were a participant in the Credit and Funding Mastery Summit, then more than likely you saw the presentation that Sharita Oglesby did on nonprofits and government grants. And that was probably one of the most powerful sessions that we had. I really, really, really enjoyed it because it really gave me personally some amazing ideas on how the nonprofit space works. What Sharita was kind of breaking down was the fact that a lot of people don't really understand the nonprofit space, and they feel like, nonprofit means that you can't have any profits. And that's absolutely not true. A nonprofit is still considered a corporation. And as such, if you are the CEO of that corporation, then you are entitled to a CEO salary. There was a big controversy a few years ago where something came out. It was publicity about how much money that these various charitable organizations were making. These different CEOs were making. You had some that were making. I think the lowest one was making about $500,000 or $700,000 a year. The rest of them were making 7 figures and above, and multiple 7 figures. And it it was a big controversy, and a lot of people were upset because they were like, well, why, this is a nonprofit, this shouldn't, these people shouldn't be making that type of money, that type of thing. The thing about it is that a nonprofit is still a business. It's still a corporation. You still need to have marketing. You still need to have, sales, promotion. There's so many different aspects that make up the operations of a nonprofit. So technically, you as a CEO are entitled to a CEO salary. I'm not saying that necessarily that you need to be making seven figures, but you definitely can make a very nice living as a founder CEO of a nonprofit. Secondly, what she was talking about was that in the nonprofit space, you literally can take any type of business model and make it into a nonprofit. So she pointed out the fact that there are literally restaurants, there are bars that are nonprofit, which I was kind of blown away by because I've never heard of that. But literally, these uh, companies or these businesses are being funded through grant money. And so you have, for instance, a restaurant like the singer Bon Jovi started a restaurant. I forget what city it's actually in, but he started a restaurant that was a nonprofit where individuals can basically come, spend, and eat whatever they desire off the menu. They don't pay for their meals. They can simply leave any type of donation that they desire, or if they're not able to leave a donation, then that's fine as well. But literally, they've set this business up as a nonprofit, and they're getting subsidized funding through grants. And as Sharita was mentioning, there are literally just billions of dollars out there in grant funding that's waiting for individuals to claim it. There's literally a coalition of billionaires that have pledged to give away over 90% of their income within their lifetime and through various foundations. And one of the ways that they're doing that is through grants to nonprofits. So literally, any type of business can be put into the nonprofit space. And the main thing is that it is serving people in some form or capacity. And it's all about how you position it. You can really literally start any business as a nonprofit and serve a community. Maybe you have a passion for a specific community. One of the examples that she gave was a client of hers who was an accountant who literally came to her because he was thinking about starting a nonprofit in the accounting space. And after talking to her, she was picking up on the vibe that he really wasn't that into it. So she started asking him about what he likes to do, what his hobbies are. And he said, I really, really love to surf. And she was like, oh, really? And he was like, yeah, I do it all the time. I'm really passionate about it and all that. And so the next thing you know, she said, you should really consider starting a nonprofit organization that helps inner city youth learn how to surf, because a lot of these inner city youth have never been to the beach. They don't know anything about, they probably barely been in the water. You could teach them how to surf and get grant funding for that and make it into a business. And so this gentleman went ahead and did that and literally created a business helping people, helping these kids to be exposed to something new, have an amazing time, new adventure, something that broadened their horizons, and it was personally fulfilling. He got to do what he really enjoyed every single day of every single day of the week, and he was paid handsomely through grant money into his nonprofit. So definitely the nonprofit space is a very, very viable way for you to get funding, the funding that you need to start or grow your business idea. So next we want to talk about business loans. There's a variety of business loans, and I could get really, really in depth on the different types. And I'm just going to give a little basic overview so you can understand how they work. But one thing to keep in mind with business loans, of course, because it is a loan, they're looking at your financials. So this type of situation is not necessarily going to work for a startup company unless you've been in business, generally speaking, for at least a year. Um, so this is for established companies. So you have things such as term loans. A term loan is just like what it sounds like. It's for a specific term. You need to have at least a 680 credit score. Um, and it is, generally speaking, they will approve you for 20% of your gross your gross revenue, whatever that is. So funding amounts generally range within the 50,000 to $500,000 range in most categories. You do need to have a 680 score, no bankruptcy in the past 7 years, and a minimum of 3 years in business for a term loan. The other category of business loans are SBA loans, and a lot of people really, really, really like these, and they're great because they're insured by the government. So that because of that, you actually will qualify for lower rates and longer terms, which will bring your payments down significantly. So it's a very, very awesome thing. You do need to have at least a 680 credit score. Um, Again, they're going to give you approvals at around 20% of whatever your gross revenue is. It is a great solution for people that are looking for smaller payments because, again, the term is longer, so your payments are going to be less. Um, they usually will fund amounts for working capital anywhere between $100,000 to $350,000. And they also do loans for real estate. So if you have a business and you're thinking about purchasing a building to operate your business out of, you can definitely do that with an SBA loan. So that's pretty awesome. Um, and they will go for anywhere between 350,000 to 5 million on real estate transactions. And that's it for that. No bankruptcies, judgments, or foreclosures in the last 3 years, no collections or open tax liens. And you do need to be at least 3 years in business, and you cannot have a sole proprietorship. Now, if you are in business, definitely if you've been in business for a while, you should definitely be looking at getting the proper business structure. And therefore, it is not very advisable that you operate as a sole proprietorship because you're not going to qualify for very many options in funding, and you're also going to be paying the highest taxes as well. So definitely look at incorporating as soon as possible. The third option for business loans is going to be your unsecured loan. And your unsecured loan is a great solution for people that have lower credit scores. They'll go all the way down to a 550 credit score. And they will fund anywhere between $10,000 to $2 million in funding. It is only going to give you 10% of your gross revenue, though. So you do need to have a little higher uh, income or gross income that's coming in order to get a significant amount. It's a very quick process. It's simple. They don't require a lot of income documentation. But these loans are, generally speaking, a lot shorter. So you're looking at a term of anywhere between 5 months to 21 months in terms of your term. So your payment is going to be a bit higher. It is very simple to do, very easy paperwork. You can either do weekly or daily payments on these type of loans. They do not require personal guarantees, so they do not report to your personal credit. And like I said, at least a 550 score, and you only need to have 1 year in business. So very flexible. You can get a quick influx of money if you need it without all the hassles of the documentation requirements of other types of loans. Now, the fourth type of loan would be a merchant cash advance. And I'm not the biggest fan of these, but depending on your situation, they may actually come in handy and be a good temporary solution for a cash flow issue. The merchant cash advances are only require a 500 credit score. They're going to be looking at, they're assuming that you are using, that you're a merchant, that you are actually running credit card transactions, and you are charging a certain amount of money through your payment gateway daily or every week or every month. So basically, they'll give you an advance against the projection of whatever type of revenue that you've been having for on average. So with that, it's it's very very easy to get. They're basically just going to want to see a couple months worth of your bank statements, but it's also going to be a lot more expensive than other types of loans because they're not asking for as much income documentation. But it does offer you, you do have to have at least a minimum of 150,000 in gross revenue in your business. You can use the funds for anything that's related to your business. They will go up to 13% of your gross revenue that you are receiving in your business. So it is very flexible, and that's what most people like about it. Now let's go into the other options separate and aside from, business loans. Let's talk about how you can build your business credit and position yourself to get funding exclusively under your business credit and how that works. So basically, we did have a presentation within the summit from Ty Crandall, who is a business funding specialist with Credit Suite, and he was sharing information about how to build business credit. Really, really great training within the summit. But I'm going to talk a little bit about the process as well and how that actually works. So generally speaking, it takes about 4 to 6 months for your average person to build out their business credit, or average company to build out their business credit. It can be shorter if you are very, very diligent and you have some of these things already in place. But if you are starting from ground zero, generally it's about 4 to 6 months. So the first step is about building your business credibility. And that is opening up a business bank account, filing for your LLC or your C or S Corp, making sure that you have an office space, and that your office space is the address that you're using on all of your business documentation. One of the biggest mistakes that a lot of people do is that they will file their business filing maybe under their home address, and then they'll later go and get a business address, and their bank statement has a whole nother address. So they have all these different addresses tied to the business. So it's not legitimate. When they go to pull the information and verify information on the business, they want to see consistency. They want to see that you're stable. They want to see that this is a reputable business. So one of the things that you need to do is to make sure that all of the information is consistent across all platforms. So on your website, on your bank accounts, all that needs to be consistent. Additionally, they do like to see you having an office space. Now, it is not 100% a requirement to have an office space. However, if you do elect to use your home address, you're going to eliminate a number of lenders that will not lend to you because you do not have a physical office. Some lenders, in fact, don't even like virtual offices. They kind of shun those and prefer that you have an official type of office. So something to keep in mind. But again, you got to do what's best for you and what makes the most sense. It's totally fine if you do need to use your home address. Just know that there are certain lenders that will not extend credit to you because of it. You also need to, make sure you have a website, your email address, you have a listing on Google. All of these things are very, very important in building out your business credibility. So that is the first step, making sure all of the information is consistent and that you are set up to where if somebody researches your company, they can find all the same consistent information. The second step in building your business credit is to apply for what is called Net 30 accounts. And a Net 30 account is just basically an account where a company has agreed to allow you to purchase items and then they will bill you after the fact. So it may be a packing supply company that sends out, packing, like envelopes or shipping type supplies. They may mail you or send you, a set of envelopes. You order envelopes that you may need to use in the course of your business, and then they will send you a bill in regards to that. So basically, you will have up to 30 days to make payment on that particular account, and they will report that information to the business credit bureaus on your behalf. Now, the thing to keep in mind too is that you don't want to wait until the last minute to pay on these business accounts because literally it doesn't work the same way as your personal in that regard. The closer that you get into the due date, you're running the risk of being reported late. So it's always best to pay it as early as possible. Literally, almost when you get that bill, just mail off the payment so that you can make sure that you're not late and that they are reporting this positive history. So the third step in the process for building business credit is to apply for store cards. So that would be cards like a Dell card for like a computer, an Apple card, Walmart, Target, something like that. These companies will actually, once you've established about 4 of these Net 30 accounts, you can move on to applying for store cards. And you can get store cards that will allow you to purchase goods and products from these major outlets that you can use for your business. You can use them to purchase supplies and furniture and all kinds of things that you may need in the course of your regular business operations. So again, that is a very important part of the process as well. And then the next stage is where you would qualify for unsecured credit cards that are exclusively under your business. So these are the Visa, the MasterCards, the Amex, all of that. Generally speaking, you're going to need to have at least 10 accounts between your Net 30s and your store cards in order to get to the stage where you qualify for the unsecured business credit cards. And you are going to want to have at least a $5,000 to $10,000 limit on any of these cards in order to qualify for some nice size business credit cards, which is usually what people are looking for. So that is another way that you can get funding for your business. And again, it's a process. It takes generally like about 4 to 6 months. But the beauty of it is that it's not tied to your Social Security number. So if you have any type of challenges within your business, something happens, you can't pay your bills, you need to file bankruptcy, Lord forbid something happens, you're not going to have your personal credit suffer as a result. One of the biggest things that a lot of business owners do is, they don't look at starting their business credit, which can give you so much leverage and so much opportunity downstream, as another source of revenue that you need for your business. So I just highly recommend always going through that business credit process because it will just give you options while you're in the midst of growth. And then the next one is your personal credit cards. Now, this is by far the simplest fashion to get the funding that you may need in order to start or grow your business. A lot of people, if you already have pretty decent credit, then more than likely you can just use the existing credit that you have or apply for new credit. We actually, my company, we actually have a program that is designed to help you to secure large amounts of personal funding in the form of credit cards and unsecured lines of credit. And with this, the beauty of it is that, a lot of times people are applying for credit and they don't know which creditors are good to apply for. Maybe you have a 690 credit score on your TransUnion, but then on your Equifax, you have a 630. Maybe a lot of times that happens quite a bit for people. So if you don't know which creditor to apply with to pull your credit, then, or, that pulls your TransUnion, then you could be applying for credit with somebody that will deny you because they're using the Equifax, they're using that lower credit score. So it's really, really important to understand not only what scores are required by the different creditors, but also what credit bureau that they actually pull. So we have a resource that is called our Ultimate Credit Card Funding Manual. It's actually a guide that lays out, I know it's well over 100 creditors that you can apply for credit with, and it lays out which creditors are good to apply for based on not only your existing credit score, but also it outlines which particular company that they pull credit through. So do they pull credit through Experian? Do they pull credit through TransUnion? Do they pull it through Equifax? This manual breaks that down. So I highly, highly, highly recommend that you check that manual out. If you've already purchased the VIP Premium All Access Pass within the Credit and Funding Summit, then you will get that as a bonus within the summit. It is actually a $97 value that we sell every day for $97. If you elect not to purchase the summit, which I don't know why you would, because it's freaking amazing content, but if you do, you can actually purchase that guide separately on our website, and the link will be below this video. So you can definitely take advantage of that. Let's see. So that's one aspect. Number two, we also have a program that helps you to get this unsecured credit card funding, like I said, in the form of either credit cards or lines of credit. And the beauty of this program is that the vast majority of the approvals that we are able to get are 0% interest approvals for the first 12 to 18 months. So let's just say that you're looking to start your business, you have an established business, and you need 50 or 60 or $100,000 in order to move forward with starting your business, growing your business, whatever the case may be. If you go through this particular program, you would actually get access to credit, to a line of credit that you can actually pull funds from at 0% interest and utilize it while you're in the process of growing your business. I mean, to me, that is definitely the best thing going, because there's not very many places that you can go. Actually, I don't know any places you can go and get 0% interest for that length of time, 12 to 18 months. So this program, what happens is we would get your information pulled through a particular credit vendor, which is called creditnav.com. Once you pull credit through there, we would send it over to have it reviewed by an underwriter. The underwriter is going to take a look at your credit and see if, based on what whatever your credit is looking like, lets you know what you qualify for. And just so you know, in terms of guidelines, it does require at least a 680 credit score, no more than 5 inquiries within the past 90 days, and no more than 45% utilization on any particular credit cards that you may currently have. So if you have a $10,000 credit card right now, you should have no more than a $4,500 balance on that particular card. And in general, for optimum credit scoring, we generally want to see people with below 30% utilization on any cards. However, under this program, we actually have creditors that we work with that will approve you up to 45%. So that in and of itself is pretty awesome. So generally, in terms of what you will qualify for under a program like this, it really is going to depend on the type of credit that you currently have. If you are somebody that has a 720 credit score, but you only have, 3 things on there, and the highest limit of the card that you may have on your credit is like, $1,000, then, that's not really going to give you any type of real approval. So the beauty of working with me and my company is that we have solutions for everybody. If you are somebody that your credit is not where it needs to be and you want to boost your credit score, you need to get some items removed so that you can, restore your credit, we can actually offer you credit repair. If you are the victim of ID theft and somebody has stolen your identity and put information on your credit report that does not belong to you, we can do a credit sweep. If you are looking to boost your score and or increase the amount of credit that you actually will qualify for, then we have trade lines. So we literally can help you at every stage get yourself positioned for this type of funding. And the beauty of this program as well is that we don't charge any out-of-pocket costs in order to do this. The program is inclusive of not only securing this funding for you, but also assisting you with building out your business credit profile. So the fee is inclusive of your business credit build out as well as your personal funding build out. So it's pretty awesome. Very, very, very valuable in terms of getting you the temporary funding that you may need, as well as getting you access to large scale funding that's not attached to your Social Security number. So with that being said, those are the main ways that you can go about getting funding for your business. And as you can see, some of them require you to have financials and some of them do not. We have solutions for you regardless of whatever your individual situation is. So what I encourage you to do is to schedule a coaching call, complimentary credit and business acceleration coaching call with me. What we will do is actually get on the phone and we'll talk exactly about what your specific goals are, what you're trying to achieve. We'll talk a bit about where you are now, and then we'll lay out a plan of action on how you can go about getting there. So if you need to restore your credit, if you need to address some things on your credit, we can put an action plan together for that. And if you're looking to secure funding, we can actually get you, if your scores are ready, we can go ahead and get you started. If you need to get some things in order to get the score where it needs to be, then we can work on that as well. So definitely make sure that you click the link below this video and schedule a complimentary coaching session. It generally lasts between 30 and 40 minutes, and we can go through everything and get you going. So with that being said, that is it for this session. Again, I am so happy that you joined us for the Credit and Funding Mastery Summit. It was an amazing journey. Very, very awesome speakers and great content that was shared. And I hope that you got some incredible value out of the information. And until next time, be sure to click the links below this video, get access to the content, and I will see you soon. Take care. Bye-bye.